So I've started the recording. So today's ngawe nagambye tugenda kuyiga engeri y'oku tradinga intraday. Naye before we trade, there are things that we should put into consideration, and these are the things you should have some sort of checklist. You as a trader, you don't just gamble and chase price. We have the court insights, we have the court reports and the open interest. Usually our brother Fahad provides us with this information. That's why even before I do analysis, I ask him the results, what has come from the court report. And this week, investors were not short on gold and not long on US oil. So that's what I based on to frame all my trades for this week. And also you have to put into consideration the weekly profiles. You ask yourself which weekly profile is going to form. Are we going to have a classic expansion? Are we going to have a midweek reversal? Are we going to have a consolidation reversal? You have to first ask yourself all of those questions. Then you have to get pairs that you trade. You shouldn't jump from one pair to another. And me on my watch list this week, I had focused on gold, DXY, US oil, and USDJPY. But for intraday, I'm going to show you how to trade gold and US oil intraday, because let me show you what's complicated so that you base on it to trade the easy pairs. But just have it in mind that gold isn't complicated, it's just your mindset. Gold is just like any other pair. All you need is to give it time and learn how it behaves. Now, also, you need to base on a high time frame narrative. For intraday trades, you need to also base on the daily bias. That's the TT Trades version of the daily bias. And I'm sure most of us have watched these videos. Actually, I expect you to have watched every video on this YouTube channel. Then we have the different ICT entry models. We have the optimal trade entry, we have the order blocks, we have the mitigation blocks, we have the breaker blocks, we have the unicorn, and the box setup. All these entry models should be on your fingertips before you actually start trading intraday or scalping, because there are lots of opportunities within this range if you actually learn all these trading models. So you need to learn all these trading models and how they work. Sorry, hold on. So I still telling you need to learn how all these trading models work. Can you hear me before I continue? Can you hear me? Okay, yeah. Let us continue. Someone's microphone is he has muted. Let's continue. So it's let us start with gold, because this week I put my main emphasis on gold because it's what gave me many entries, gold, and I trade it along with USDJPY. In most cases, if I hit my daily target, I stay out of the market. So let us see gold. So when I was starting this week, I had to first look at the higher time frame on gold, and usually on the high time frame, we start with the daily. I'm not going to repeat, drawing everything here because of time, because we've already wasted time, but I'm going to share with you the images, because I usually take screenshots. So let me share with you the images. You tell me if you can see the images. Let me open it first. So, gold. This is the week that we had. This was the previous week. So, can you see this image? Mwena kino ekifaananyi mukiraba? Yes. So, okay, now you can mute your mic, please, so that I can continue. So, with gold this week, we were basing on the high time frame narrative. Actually, I was aiming for the weekly FVG, and gold reached that zone. That's when we had some kind of a bit of a fast. So on Thursday and Friday, then again it continued to drop. So gold, this was let me get to trading view because I can't. So as you see on gold, I'm sorry for having these dirty charts, but I don't want, if I erase everything again, I will have to. But when I'm teaching intraday, I'm going to erase everything. So this is my gold chart. This is the week that we attended. This was Friday, Thursday, Wednesday, and Tuesday. Now remember, initially on the daily setup, we were already reacting from this daily PD array. You can see this daily order block. So when price came in on the previous week, prior to this week, when the price came, it gave us a reaction from this daily order block. So when we got the reaction from the daily order block, price failed to break this high, giving us these failure swings or SMT. So when price failed, gave us the failure swings, what was our next draw on liquidity? This swing high, this swing low. Because remember, the low is from internal to external. So our next draw on liquidity was this swing low. We also had other points of interest like these equal lows on the daily, and also we also had this weekly FVG. It was around here. Let me show you the weekly FVG. I don't want to make assumptions. So you can actually see this weekly FVG that we were aiming for overall on gold. You can see the weekly FVG that we were aiming for. Before you do all that intraday and scalping, you need to base on the high time frames. What is your high time frame saying? Actually, this weekly FVG has turned into an inversion because price went through it. Can you see what's happening on my screen? Yes. So now, if you get to know that the high time frame is bearish, and also the court reports are bearish, because Fahad told us it was it on Sunday? Yeah, when we had a session with him, he told us that investors were net short on this asset on gold. So now, when we were following all the trades for this week, we had to know that the investors are net short on this asset class. So now that's what you base on to actually do your intraday trades. So Monday, I was out of the markets. I didn't trade on Monday. Then I realized how Monday closed. Monday closed bearish. So on Tuesday, I expected to be bearish, aiming for this draw on liquidity. Because the reason that's why I was expecting to be bearish It's because price closed below the previous day's low, and again my whole narrative was bearish, because you can see on this daily chart, price was reacting from this order block. So price was still trading lower, and my technicals were in line with what? With the quantitatives and the fundamentals. Because actually, even on the DXY, these guys were fighting to go into a recession, meaning that they had to keep on hiking the dollar. The dollar had to gain value. So, as they had to keep on hiking the dollar, remember, as the dollar is going up, other asset classes are going down. Because as the dollar is in a rally, other pairs, the euro, the GBP are in a drop, and also commodities like gold are in a drop. So even the correlation was matching, everything was matching. So I was confident when I got into my trade, very first trade on Tuesday. So now let us go to what everyone is waiting for, intraday. Now that I know that MAD has closed bearish, and this is my draw on liquidity, how do I trade on Tuesday? How do I go for my intraday trade? So you get to the lower time frame. Tuesday, get to the lower time frames. Now for gold, if you want to trade gold intraday, you need to use the lower time frames. So now I'm going to erase everything. I want a clean chart so that we start from scratch. So everything has been erased. So someone hope send this guy the link to Forex Miners, the link to this session. But now let us continue with the intraday on gold Tuesday. Because remember, Monday closed bearish, so Tuesday I knew that we were going to trade lower. So how do I get to trade intraday gold? This is Wednesday, and yeah, this is Tuesday. So if you are to trade intraday, the very first thing you do is to mark the New York midnight open price. Remember, we are expecting to have the Judas swing. We only miss out the Judas swing or the manipulation when price is already reacting from a high time frame PD array in Asia. And I'm going to show you how it affects you when you actually don't realize how you miss trades, because I actually missed a trade on Wednesday. So Tuesday I came and I marked my New York midnight open price. This is, you get to the coordinates, it was at 1913.56. This is what you should do. Pointer 56, use the horizontal way. Then once you mark your New York midnight open price, remember you can use the PD arrays on the what? On the H1. And again, there is something special about gold. Gold usually has London moves on gold always occur at around 3. So you should take note of this time frame window. 3 a.m. Yeah, it's 3 a.m. New York time. This is where we usually have the manipulations or rejections on gold. So if you're to trade gold, you should actually wake up early. In Uganda, at least sawa emu inokusanga mu katale. That's New York midnight. It's around New York time. It's around sawa emu. It's emu za Uganda zibeera New York midnight. So sawa big. It's so because this 3 is 10 a.m. in Uganda. So this time should find you when you're already in the market, when you already know what to do. Remember, this on our high time frame, you know that we are bearish. But how am I going to enter this trade to go short on gold? So the very first thing you do is to always mark your New York midnight open price and wait for price to give you an entry to either run on stops, to either give you a market structure shift, to either react from a PD array. So now here, price was giving us a reaction from this order block. This is where price was aiming for. Because actually you realize that this was liquidity. You see this? This is low resistance liquidity. So someone will fall for this to be order block. I hear the last buy before sale. Those who just cram, not knowing that these are failure swings. This is a liquidity. So you have to take note of this. You consider this is low resistance liquidity, and they are actually going to come and sweep this liquidity before you actually do what? Go short on gold. So the moment you realize that this is the liquidity, you realize that we have this PD array, we have this bearish order block this week. Or some people usually can consider, so you're not going to enter from the 1 hour time frame. Remember, I'm teaching you intraday scalping, and you can't scalp from the 1 hour time frame. So now you break down to the lower time frames. From the 1 hour, you go to the next time frames. Can you hear me? No, should I continue?
Yes, sir. I hear you.
So now we are waiting for this run on stops, and we actually had it. But again, still, this is the 30 minutes time frame. This is our stop trade that occurred on a Tuesday. Remember, you're looking for an entry, you're looking for how you're going to enter the market. And I'm going to show you all these opportunities. At least you're not going to fail to find an entry. But remember, it's all based on what? Fundamentals, quantitatives, and technicals, and the daily bias. So all those things you combine and start trading. So now this high has been raided. So this is a run on buy stocks, meaning that we are starting what we call our sell. Is it called a purge on stocks? Some sort of, there is a MXM trader called it. So you mark this high. This is going to be your run on stocks. Remember, this all occurs out of patience. Some traders are already, aggressive to go short, not knowing that you have to be patient. Remember, you realize when you look to your left, price has already reacted from some PD arrays, so price is not going to go back to that zone. Now this FVG price had already reacted from it, so you shouldn't be worried about price going all the way this side. Remember, we were aiming for this low resistance liquidity, and it's what we read. So let's break down to the 15 minutes. I think you're seeing a breaking and checking. I think you're seeing how we are checking all time frames. So you shouldn't just focus on one time frame if you're looking for intraday opportunities. So now let us break to the 15-minute time frame. I think you can see this run on stops that occurred. But now here, I don't have an entry yet. Here on the 15 minutes, by the time price has this run on stops, the moment I see that price has run on my buy stops, it means that we have now gotten what we call first hold on a bit. There is what we call this a Tuesday. This is a Tuesday, yes. I'm sorry for the inconveniences. Remember, yeah, this is sell programs being activated. I had forgotten the word, that's why I was confused. This is what we are going to end up with. So let us go back to our charts. So these are sell programs have been activated, meaning that we are going to form some sort of a curve where we shall have the buy side and sell side of the curve. So you break down to the 5-minute time frame. And this is where you're going to enjoy your scalps flipping. You don't just flip like, no offense, some people flip like fools whereby they don't even put stop losses. But I'm going to show you a sensible way of flipping those who love layering. First, let me first zoom out to Tuesday. Can you see what's happening on my screen? Yeah, this is the zone I'm playing. Can you see what's happening on my screen? Folks, I need feedback from you. Okay, so now, actually, when you break down to the lower time frames, you can see that these are relatively equal highs, and that's where we had our run on stops. So now that our sell programs have been activated, where would be my first entry? My first entry was this. My first entry was on this balanced price range BPR. Because actually a balanced price range is when two FVGs meet each other. That's also an entry model. So at first I was aiming for this balanced price range, and also I was aiming for this breaker block. You can see this breaker block. This is a bearish break. So this was my first entry, and guess what? They didn't tap me in. But remember, even if they don't tap you in, don't chase price. Just be calm. Just stay calm. Now that they have not tapped you in, what are you going to do next? You're going to look for another PD array, because you're waiting for price to come. It actually doesn't tap you in. We have a mitigation block. Then if you want to get in, you get this mitigation block and you pull it to the other side of the curve. And again, when this price failed to tap you in, it formed an order block again and another breaker block. So these are other entries that you're getting. Remember, let us label. This was our first entry and we missed it. Entry 1. You've missed entry 1. but you're doing it like a pro. You're not going to chase price. You've missed out on entry 1. So this is what you expected. Price came, you expected it to come here, but it didn't reach. Then when it dropped, it formed another entry. You can see this bearish order block. Then a reminder, once our sell programs have been activated, remember after this run on buy stops, after these sell programs have been activated, price is going to start respecting bearish PDR range from this point onwards. Because remember, it's going to form some sort of a curve. Let me first show you the curve. Price is going to form some sort of a curve. I'm sorry, I'm not accurate with the diagrams, but you will bear with me. Now, like these curves. Hold on a bit, I'm trying to show you the curve. Which curve? I'll tap this one. So you can see this curve. Now this curve, we have two sides. Remember, after we got our run on what? On buy stops. This is Tuesday. You already know the overall bias on the what? On the high time frame. I'm showing you intraday what opportunities. Because most of you complain, I know the right bias, but I don't know how to enter. So that even in the future, you don't miss out on what? Opportunities to trade. Actually, you realize that we had another BPR in this range. So you even have a second entry before you even have this third entry. This BPR. Because yes, this thing from the BPR. Can you see this other BPR? This is actually your second entry. Can you see the BPR? I need feedback. And let me hope you guys all know the BPR. In fact, let us list down. We can focus on listing it down. B? Yes, it's called a BPR. Balanced price range. A BPR is when two FVGs meet each other, one on the buy side and one on the sell side. This was our first entry. Actually, if you saw this, you would have an entry at the consequent encroachment of this BPR. You will mark a half of this BPR. You get your feed through and mark your consequent encroachment. You're seeing how you're entering this trade when you're not stressed, when you're not stressing price package, you also chase it. That's not how professionals do things. Professionals wait for price to deliver itself to them. Professionals don't chase price. It's fools that chase price. No offense, it's fools that chase price. Kubanga you just chase it. And actually, when you try to chase price, it will, because usually, I'm sure those people who chase price have wide stop losses. That's why they keep on blowing accounts. I'm going to put a lot of time on this diagram, because the other diagrams are just going to go through what? There are images. So I'm going to put my emphasis on this setup. So pay maximum attention on this setup, because that's where you're going to get what? Your intraday opportunities. Other setups, I'm going to just show you images, because I hate long sessions. That's why I used to hate my course. So I didn't have a choice. I had to watch the course. Now you're seeing what's happening. This is our BPR. So you label, this is your second entry. You've been tapped here, you get tapped in. So price always gives you a second chance. Those who have dated, you know, when they give you a second chance, this time you don't miss it. You don't make the same mistakes you made. So if I made a mistake of missing the first trade and I see these opportunities, why not go on to the second entry? And remember, I'm not going to tell you how to define your stop loss. You all know your disciplines of trading. But for now, from this entry, it will be advised for me to put my stop loss above this high. Do you know why I would put it above this high? Because price has already run on buy stops. So there is no reason as to why price will come back to this zone. So these are already buy stops. Price has already done what? Run on buy stops. It has raided these buy stops. So Ferrari Zongarachi price has to come back for this zone. I remember there is a session I can see the previous session when Fahad was showing that his analysis. He was like, there is that pair where he showed you where I was like, if you actually missed this stage, Kemani Chokola. Price had already run these buy stops. And he was like, the moment price runs on these buy stops, there is no reason as to why they are going to come back here. So, you don't expect price to go back to this zone. So this is where I put my stop loss. So, remember I'm going short. And see how, and this would be your first stop loss. Price has already run on what? These are buy stops. Probably I would put it here. Now this is 16 pips. A 16 pip stop loss on gold is something that's rare, because most people have a 30 pip stop loss, 40 pip stop loss. Now your first entry has tapped you in, and remember, you know the next draw on the liquidity. You already have what? A 16 pip stop loss. You know where you're going. Actually, the good thing about this pair, it always delivers to the draw on liquidity. Now let me remove this. This is your second entry. Your second entry is on the DPR. Remember, so far we've used the DPR. Then price taps you in and it drops. Now the fact that price has reacted from this DPR, I don't expect it to go back here. And even on the higher time frame, there is something, sorry, on the lower time frames, there is something that's happening within this frame. I'm not going to drop down to the 1 minute time frame. I actually hate the 1 minute. Now you stop on the 5 minutes. So now here we have what we call our bearish order block. You mark it open. Not only do we have the bearish order block, but we also have the bearish breakup block. This is intraday. 5 minutes. You say we broke down from the daily 1 hour, 30 minutes, 15 minutes, 5 minutes. Pneumonia entries are intraday. I don't want to see anyone complain about entries after this session. You see this zone? What do we have? We have a bearish order block. We are going to label it. In a bearish order block, you label it. Ndabona ntaddamu okugamba mbu talaba entries. Bearish order block. Anyway, it was a joke. Munansonyi. Anyway, bayinza okubiteekamu feelings. In a bearish order block. What else do we have? We have a what? A bearish breakup block. So, sigenda typing on your bearish breakup. These are all what? These are all entry models. We've seen the bearish. This is the breakup block. Then we've seen a what? A bearish order block. And also we have an FVG, a fair value gap, within this range. Let me label it. You can see this. Price actually gave you displacement, nuclear fair value gap. So ezo zonna opportunities. Kati gwagamba nti notolaba intraday opportunities. Maybe you didn't know these things, but today ndikusomesa. I don't want you to miss out on trades because that's money. You miss a trade, that's money being missed you. Also be sent for missing that trade. So I think let us, I'm not going to label them, but we shall just use some sort of matching. Most of us went through nursery school. What do you see? The Irish order block, you match it. What do you see? BPR, you match it. And what do you see? Breaker block, you match it. I think more is yet to come. What do you see? An FVG, you match it. So I'm going to add something onto this. We also have a fair value gap. That's why ICT is actually very good, because ICT gives you a lot of opportunities to get into the market. People say that we are good at just making our charts fancy and looking nice. They don't know that actually the fancier the charts, the more even pleasant they give us, the more you know when something is fancy, appetite of trading, than having those dirty charts of some of our brothers and sisters who I won't mention. Maybe if I continue, can you see what's happening and can you hear me? Monpolina? Okay, let us continue. Good thing this is all being recorded. You shall save it for future. So, Sigenda zero Bolinga, but I'm going to give them the positions. So this was the first entry we missed. Second entry we got tapped in. Third entry is on the order block. What did price go? Here price came tapped you in. Remember from here your stop loss is here. So price taps you in on the order block. Now the moment you've already gotten the first entry, let me first give you this. This is entry 3. Yeah. Entry 3. Entry 3 bakutadde mu katale. Let me zoom in a bit. Let me put it at 14. Kyonna kyekiri. Someone will see that. Now this is the third entry. Bakutadde mu katale. And at the same time, there is another entry within this entry. Okitegeera. Tulina what? Tulina this breaker block. So, actually, this is giving us some what we call a unicorn, a breaker block and an FVG. So, this also gets you in. Actually, by the time the order block gets you in, the breaker block has also gotten you in. So, we name this entry 4. Nsigaddeko eno setup gimaliddeko obudde kubanga endala sigenda zinyonyola. Njaba nyonyola ndowooza ka box setup kokka ku oil. Naye endala sigenda ozibanyonyola. So kati if you don't pay attention here, you will watch the recording. This is now our fourth entry. Then we're manner of fourth entry, someone will be afraid to miss this trade. Nagamba nze kanyingirire ku ka FVG. Price either n'obutatuuka eno naye n'ennyingiza ku FVG. And you see that actually price came and tapped into the FVG. N'olowooza nti ogenze n'ekomawo, it starts consolidating, you get into profits n'ekomyawo. So there is another trader who got into the what? The FVG. We are all different types of traders. Kati nyabalaga flipping, flipper wachikola. I'm talking about a person flipping at Yamani Simon Pamalaga Goba price. So, you have this fifth entry. These are now 5 entries. Entry 5. FVG. I'm doing this on gold. Njagala balaga nti no zino pairs tutya tuzikiira bwerere actually zo zigaba ssente buli kanaku gold olina teyinza lemerwa kuwa pips 10. I used to have a target of 20 pips. I used to have a target of 20 pips a day. No gold at least empankaaga nsanvu ya. So when you focus and run, a lot will come. Remember, this is our curve. This is the what? By side of the curve. Don't forget, this is the by side of the curve. By side of the curve. And this is our sell side of the curve. Sell side of the curve. Ngoza mubiraba. Mulekerawo okusasula abantu courses zisimanga signals biki. Kino kintu osobola okyekolera. Bw'oba osasula omuntu simanga ku flippingire account yo n'agi blowing nga tolina gw'ogenda kuloopera. Let me hope I'm not offending anyone. Abakola account management anyway. Some traders don't have time to sit on these charts nga board bagala ba flippingira. Now, these entries get you. This is so now for all these other entries, this is going to be your stop loss. You can actually see that this is a what? A 7 pip stop loss on gold. So that now these people who flip when you're getting that in, when price comes back to this zone, to this order block, this is where you add your layers. Do you know why you add your layers from here? Remember, the first entry is already in profits. So some of these profits are going to be able to hold these trades. So from here, we layer. Let me even label it. At our total, so layers, we are here. From here, we start layering. Remember, your first, I would advise you to only layer after your first entry is already in profits. The simple logic is that agamagoba gokoze ku first entry, gagenda okuyamba okuholdinga positions ziri zogenda okulayeringa. So, from this page, I will do what? I will layer. I will have flippers, scalpers, I will have chiyingiramu. Then the Susuka trade set. I will continue as you make this screen that. But some traders that you can put because males, they start layering from here. And what happens after you've layered, your stop loss is here 7 pips. Actually, some people usually don't put a stop loss whenever they layer. They just pour orders, which I don't advise you. That's not professional. I advise you to always put a what? A stop loss. 7 pips. Don't risk what you cannot afford to lose. Some people just be like kankwatejina emitwalo ana injiweyo. Then emikisa nejiba kwata ne bakwatejja emitwalo ana ne bagifuula millions. Some people line up account button. Some people like us, we have smaller accounts. That we want to ensure proper risk management. We get this money from other sources. So before you layer with your friends, know where you get capital from. Some people get capital from parents. Some people get capital from, some people are ladies. Baina basajja ababayuwamu sente okola kyofuna capital trading. Not go manyachi ennaku yo as a trader, know your background. And you know that capital no jawano, let me treat it the way I'm supposed to treat it. So what happens? I'm sorry for talking a lot. So what happens? Price gets in. Now these are already 5 entries. So we have someone new in the family, the FVG. Now we have what we call the mitigation block. A mitigation block, what? It's a PD array that is on a different side of the curve. For instance, it was a bullish order block on the buy side of the curve. So, these PD arrays can give you more opportunities to get into the market. This is a mitigation block. Let me label it mitigation block. This PD array is going to give you an opportunity to get into the market. So you pull it, you label it in an added bullish order block. No, this is but now usually within these mitigation blocks, there are always what? There are always opportunities to get into the market. Let me show you this opportunity. When you pull this mitigation block, what do you see? You have another PD array. You have this sub-bearish order block. So you label it that we have a bearish order block within a mitigation block. Actually, mitigation block zikuyamba kulaba PD arrays ziri ku side endala ya curve. Era ogirengera eno bearish order block. Let me put it in some box so that you see it. You can see this bearish order block. Let me give it a color, a different color. It's another PD array within this mitigation block. So this is your 6 entry. Now you can see that entries these are all now 6 entries. Ngera some of it onalaba sonayingira katale. Awobaako n'ekikunoonya. Eno entry ya mukaaga era tonayingira katale. Anyway, the market has been given you another chance. This is a 5-minute time frame. Time frame. So now, where will your stop loss be? You always have to look at where liquidity is. You realize that actually we have another fair value gap within this range. So price may come for that FVG. So when you're putting your entry here, your stop loss is here. This is your stop loss for everything happening within this zone. And when you're going to build a stop loss here, and what happens? You put this as your stop loss. Stop loss. So when I'm actually entering here, this is your order block. Some people may enter from the open, while others may enter from the middle threshold, half of that order block. So for those entering on the middle threshold and open, we all know what we are affording to risk. So you go short here. Let me show you why I wouldn't put my stop loss at the where I was supposed to put it here. Broker chi agenda okukkiriza okozesa stop loss ku gold. I think you can see the logic. Some things are impossible. So bagenda kukkiriza kukola ki kukozesa stop loss on gold. That broker agenda chigana. It's very hard to find a broker allowing you to use a 2-pip stop loss on gold. And also, at least use a 5-pip or 10-pip stop loss. Remember, even small stop losses are another way to keep traders from the markets, because brokers like traders who use small stop losses. I know the rules tell us to put it at the top, but this stop loss is too small. 2-pip stop loss for gold, yet gold is volatile. Actually, there is something that's not right. Probably you're trying to ensure that super risk management. You can't use a 2-pip stop loss on gold. So what do? I put it where I'm supposed to put it. Even if you actually put it above this FVG, or you put it where you're supposed to put it, it's still understandable. These are around 10 pips. 10 pips Olimo entry ya mukaaga 10 pip stop loss. It's better than you putting a 2 pip stop loss, because brokers are going to manipulate and are going to kick you out and you're going to complain. So now our mitigation broke naye because it has also done what? Tapped us inside this market. Then we'll continue trading lower. You can see how all these opportunities are gotten on a single time frame. It's not for 5 minutes in zino opportunities. So I do what? Labels. Because waliwo kyesa labeling, waliwo kyetwafunye. You can see twafunye unicorn nakwogeddeko wali. Then bwetufuna mitigation block. Mitigation block. Finally letter A okoze. Mitigation block. Ndowooza mulaba before I continue nabeera bidero mukyaliko. Mukyaliko, I need feedback. Kwemoliye kansooke mbakebereko. Ndaba abasobodde kwebali kale tweyongereyo. So, zino zonna entries, let me do this omuntu akirabe. Zino zonna entries naye namukirabe engeri gyentradinga nkozesa fundamentals, quantitatives, technicals, high time frame byonna. So that by the time I lose a trade, I lose like a pro. Number yes, that trade has gone, but I've lost like a pro. Now, from all these entries, you're going to be already tapped in onto this. And remember, some people may even start taking partials off. Because you can see, this may be your first TP. When you get tapped in, this is going to be your first TP. This is going to be your TP1. TP1, 30 pips. Sorry, 36 pips. As 36 pips, it's a lot for some traders who actually know what they want. 36 pips is a lot. And you see actually price is giving you more opportunities. You can see this, bearish. Remember, on the sell side of the curve, price is going to respect what? Bearish PD arrays. Tosuubira bullish PD array kubeera respected. Actually, omwana wakubuuliza lwaki at times bullish order block baziyitamu buyisi. Already you know our bias on gold, we are short. Lwaki okozesa, why are you buying? You know, we need to follow the trend. Why are you buying in a down trend? So, tulina neno open. I would call this a rejection block, but it's not a rejection block kubanga it's not floating in space. Usually it's a rejection block yonkeka ebeera a floating what? In space. So and also rejection block, some people may call this a weak and also rejection block, and then there is what? Order block. So kati wanesize zino zonna entries, probably obadde olina byokola. How would I enter this trade? I would tap this and this would be my stop loss. And let's see what actually price does. They don't stop you out. It's 9 pips stop loss. You're risking 9 pips. I think you're seeing that you don't need to risk a lot of pips while trading gold. You just break down to smaller time frames. And you can see that actually this trade na you ochali muchintu. You still, remember you already put your layers. So it's already in our profits. So you can here, even here you can add more layers. So this is your seventh entry. So seventh entry. Sorry, let me label it. This is a seventh entry. And what do they say? Layer. Remember, we know our overall draw on liquidity on the day. So from here, I layer. I want to I think you see how you flip like a person who knows what he's doing. Flipping up. No gamba without a bloom and a kafuluma. That's not how professionals do it. If you're confident, flip knowing that storing that waka blue, it either hits your stop loss or take profits. One no layer. Remember, from all these movements already we know profits. Because by the time we reach this point, let me see, price has tapped you in by roughly 20 pips. You already 20 pips in profits. It depends on the lot size you're using. So here you add more layers. So there's a lot of you go scalping that, you go flipping that, trigger intraday, trigger actually trigger the single trading because also one day we already knew our final draw on liquidity on our gold. You didn't just have a swing setups no direct at the moment you enter. So now here you layering, you get to layer from here. Let us go back to the high time frame. So let me show you something that happens on the high time frames. Remember, this is just Tuesday. Let's be able to Tuesday because enough endala sigenda zimala ko budde. Enough endala just 5 minutes to go. To get bigger data anyway. I want to mark the target here Feyachi. So this was Monday, Tuesday. So Tuesday wano twali tufulumira akatale. Mulengerawo ndowooza wano ku Tuesday twali tugenda ofulumira akatale. Kati katubale pips meka eziriwo. Remember ugaseko zileyazo obeerezaamu. And actually there is something special about this week. The live price had closed above this zone on a Tuesday, Wednesday, and it's also kulinda price reacting from a PDR one ndaba gap netuluka tweyongera okukkirira, but it closed below this swing low. So you have to take note. Daily bias by TT trades ebyo byajja bibasomesa. I pray this thing is recording kubanga. Anyway, kimanyi bi recording. Sorry. Naye kwemuli, first give me feedback. Kwemuli. Yes, is it open? Nina chenga tako? Okay, tuyongeleyo. Someone's microphone is open. Questions to Jazifun after the session. Today, to Tuesday. Remember, marking very low so that we know our take profit. Katolengera small time frames can let me go to 15 minutes. Nja tulabe ka take profit kaliwa. Let me go to the H1. Hold on a bit. This would be our take profit just made. Kati omuntu atagenda kuswiminga gold oba kuholdinga gold ku Tuesday wano wali ofulumiramu kati twamanya waliwo pips meka. Let us go back to the 5 minutes. I think now kati tumanyi entries. So that whenever you're looking for entries, you have to base on the high time frame narrative. Hold on a bit. Nah. I think they should give us AIs to help us navigate through charts. Bang. Let me show you take profit pips maker. Remember on a TP1, remember you're already layering those who want to layer. The pips maker. You can see 116 pips. 116 pips on gold. Abamu bagweba pips abiri naye n'olabanga akoleddeko sente. Kati imagine 7 entries, you've already put your layers, pips 1, second layer, pips chenda. I think you see how gold is giving you. I think you see average number of pips is 90 pips. I think you can see. Remember, we already know our drone liquidity and akatari kaitamu bulungi TP hit. This is our final TP. That one I just say final TP. This is your final TP. This is your final first one. Let me update them here, but they call it freezing. Okay, let me just save it like that. So, this will be your final TP on this day. Kat Tuesday, what day? Omaze okufuna ki? Pips maker. You've gotten all those pips. Those who have flipped have flipped. Those who have just added on more positions have done it. And you're seeing how profitable this is. Actually, you need to have a weekly target. Katuano, some people have already hit their weekly targets. Ngakataitaga week number. When those will continue, we are going to continue to Wednesday. Wednesday's again that did the move thing. Then I just balaga how again I entered. So Tuesday I will come before I continue. Mubitegera. Bina kye bibayamba.
Sure.
Kale tweyongereyo. Awo gundi ki? Gundi owedde. Then let us go to Wednesday. So at Tuesday you remove everything. I told you I'm going to even use images. I think you can see this image. Image mujiraba. Actually, whenever you take trades, you need to save your setups. I think you can see this whole image. I'm going to share them in the group. Tuesday. That's how Tuesday went. You see, we were basing on the high time frame narrative. Now Tuesday closed bearish. Below what? Below, yeah. Tuesday closed bearish. So Wednesday, this will be my day on liquidity, the equal lows. Image mujiraba one. Mulaba kasane image. I need feedback from you guys if I continue. Can you see this image?
Yes, you can see.
Okay. Now let us continue. So Katin, this week we had this equal lows on the daily. Wednesday in a target here. Actually, Wednesday the first entry I wasn't starting. Because someone even told me. Let me see. Yeah. Tuesday with it. Someone even told me that that setup is for next week. Why omuntu awo ayina kye yaŋŋamba naye it hit hard. I remember I shared this setup in the group where they didn't tap me in, but I gave these markets a revenge. So, Wednesday, this was my initial setup. I told you, wetumala gundi ki, sigenda lwawo nnyo wano tugenda kuddukamuko. So, ngenda ku chat ngenda kupasuka bupasusi. I think you can see this initial setup. I missed a London trade. They didn't tap me in on gold. Then this is where my mind got opened. Let me do for you Wednesday so that ebirala tubiyitamu buyisi, because I need you to see. Tugende ku Lwokusatu. Era kanziremu the same things. What do? We mark your New York midnight price and Wednesday there. First thing you do when you wake up. And I told you about that 3 a.m. time frame window on gold. Actually, it's our brother Unicorn who told me about that time frame window. Thanks to him. You know, whenever you see someone doing something that's better than what you're doing, you need to do what? You need to consult them. I consulted Unicorn. So now this was Wednesday. Let me mark a New York midnight open price then to a hold on a bit. Yeah, I use this cheap color. New York midnight open at what it opened at 1899.82. 1899.82. Ebirala tugabiyitamu buyisi okujjako oil yakola kye bayita box setup. First hold on. Sugar. Yes, it's 1899. Sorry. 18. I think the machine is freezing, so let me get a solution for this. $18.19 ekyo kankiveeko. Let me just estimate, though I wanted to go for accuracy. I think let me first end the first bit of this session. I will start my device, then we continue. How do you see? Let us first go for a short break. How do you see? I need feedback. Tugendeko mu ka short break kubanga even omuntu omusomesa nga tawumoddemu, it's not good. So part 1 is going to end. We are coming in back part 2, so stay active. Let me first end the recording.